Hey everyone, welcome back. Today we're diving into 3 AI stocks under $50 with explosive potential for 2026. The AI market is hitting $1.5 trillion in 2025 and jumping to $2 trillion in 2026. That's 40% growth in 1 year. While everyone chases Nvidia at $800 per share, I found 3 AI companies under $50 that could deliver massive returns. Quick disclaimer: this is educational content, not financial advice. Do your own research and consult a financial advisor. Prices are current as of December 9, 2025. Let's get into it. Stock 1. SoundHound AI. Trading at $12.68 with a $5.36 billion market cap. SoundHound builds voice AI that's 35 to 40% more accurate than Siri or Alexa. They power voice experiences in cars, restaurants, banks, and healthcare. Major partners include Hyundai, Stellantis, and Uber Eats. On November 26th, they launched voice-powered parking. With Parkopedia, you can now find parking, compare prices, and pay all hands-free through your car. Third quarter 2025 earnings crushed it. Revenue hit $42 million, up 68% year-over-year. They only did $25 million in Q3 2024. They're tracking $165 to $180 million for full year 2025. And management raised guidance. They have $169 million in cash with zero debt. They acquired Interactions to strengthen their position in agentic AI, where AI agents handle complex customer interactions autonomously. Management expects break-even EBITDA by late 2025 or early 2026. Profitability is finally in sight. 7 analysts rated a buy with a consensus target of $16.33. That's 29% upside. The high target is $26 from H.C. Wainwright, which doubles your money. The risks? Competition from Google, Amazon, and Apple with much deeper pockets. The stock is down 36% year-to-date from $25. Still unprofitable on GAAP with a $109 million Q3 loss, though much is non-cash charges. Trades at 36 times sales, which is expensive. My take: if voice AI becomes ubiquitous in 2 to 3 years, SoundHound is the best pure play, but it's high risk, high reward. Keep position size at 3 to 5% of your portfolio. Stock 2. Serve Robotics. Serve Robotics at $13.36 with a market cap under $1 billion. Serve builds autonomous sidewalk delivery robots. They're backed by Uber, which owns 14%, and use Nvidia AI chips. On December 5th, just 4 days ago, they expanded into Fort Lauderdale with Uber Eats. Their third-gen robots have 5 times more computing power, travel twice as far, and operate 6 more hours per day. They partnered with DoorDash, giving them access to 80% of U.S. food delivery through Uber and DoorDash combined. In November, they deployed their 1,000th robot. Q3 revenue was only $1.8 million. Full year 2025 is around $0.5 million, but management projects 10x growth in 2026 to $25 million. They redeploying to 1,000 robots by end of 2025. Delivery volume grew 66% quarter-over-quarter and 300% year-over-year. Here's the catalyst. This week, reports emerged that the Trump administration is prioritizing domestic robotics. Commerce Secretary Howard Lutnick is meeting with industry leaders. The stock surged 26% on this news. The autonomous delivery market grows from $740 million in 2025 to $3.8 billion by 2032. That's 27% annual growth. Labor shortages are pushing companies toward automation. Wedbush has an outperform rating with an $18 target, implying 35% upside. Some targets go to $20 if the 10x revenue happens. The risks are massive. This is the most speculative pick. They're losing $80 million on revenue under $2 million. Huge cash burn. They recently raised capital through dilution and will likely need more. Cities can ban sidewalk robots. Competition from Starship Technologies and Neuro is intense. The stock traded between $5 and $23 this year. Extreme volatility. My take: this is a lottery ticket. It could 5x to 10x in 3 to 5 years if autonomous delivery takes off, but it could also go to zero. Only invest 1 to 2% of your portfolio, money you can afford to lose completely. Stock 3. Palantir Technologies. At $45.12 with a $97 billion market cap, Palantir builds AI data analytics platforms for government and enterprises. Their Gotham platform serves defense agencies. Foundry serves commercial clients. Their new AIP platform helps companies integrate large language models. This is real AI with real customers. The U.S. military uses it for battlefield intelligence. Hospitals optimize patient care. Manufacturers manage supply chains. Q3 2025 revenue was $726 million, up 30% year over year. U.S. commercial revenue grew 50%. They're successfully expanding beyond government. Net income was $144 million with positive free cash flow. They're profitable and generating cash. That's rare in AI. They have $4.6 billion in cash with zero debt. Customer count grew from 497 to 629, up 27%. Existing customers are spending 18% more year over year. In November, they joined the S&P 500, forcing index funds to buy. Their AI platform conducted over 1,000 boot camps where customers learn hands-on. This creates a powerful sales pipeline. Analyst targets range from $28 to $75. Average is $45, right where it trades. But Palantir consistently beats expectations and proves skeptics wrong. The risks valuation is expensive at 130 times forward earnings and 46 times sales. The stock ran up significantly in 2025. You're not getting a bargain. Government contracts are still 55% of revenue. Any defense spending cuts would hurt. Competition from Snowflake, Databricks, Microsoft, and Google is increasing. The stock dropped 20% in November before recovering. My take? Unlike the others, Palantir has proven its model works. They're profitable, growing 30% and expanding into Fortune 500 companies. Government relationships provide sticky recurring revenue for lower-risk AI exposure. This is the pick. Consider 7 to 10% of your portfolio. Conclusion: 3 AI stocks under $50 with different risk profiles. SoundHound at 12.68. High-growth voice AI, 68% revenue growth, approaching profitability. For aggressive investors, 3 to 5% position, Serve at 13.36. Ultra-speculative delivery robots. 10x revenue projection. Highest risk and reward. 1 to 2% position only. Palantir at 45.12. Profitable AI analytics, 30% growth, established customer base, lowest risk. 7 to 10% position. Key takeaways: diversify across multiple AI stocks. Match position size to risk tolerance. These aren't passive investments. Monitor quarterly earnings and partnerships. Watch 2026. Catalysts like AI regulation, enterprise adoption, and paths to profitability. My suggested allocation: 3% SoundHound, 1% Serve, 8% Palantir in a growth-focused portfolio. Adjust based on your risk tolerance and time horizon. AI is transforming every industry. These 3 companies are positioned to benefit in different ways. Build wealth consistently while managing risk intelligently. If this helped you, hit like and subscribe for more stock analysis. Comment below with your AI stock picks for 2026. Thanks for watching and invest wisely.